What's going on, everybody? Welcome back to another video. So I'm gonna adjust my mic real quick here. So basically today what I'm gonna be doing for you guys is breaking down gold, GJ, NAS, and US 30. So tomorrow we have CPI news. I believe it's at 8:30 in the morning. I haven't been trading this week. I've been focused on a lot of other things, but I still wanted to come on, give you guys that free sauce, if that's how you want to call it. Realistically, just giving you guys a breakdown of my outlook on what the markets are doing right now. So what we have here on US 30 is an overall bearish condition, as you could easily establish. The first thing that you guys have to do on a day-to-day basis is establish a trend on the daily time frame. What is the daily time frame doing? If we look at the daily time frame, we have price in a very clear downtrend. Right, I was about to say descending channel, but that's not true. We have price in a very clear downtrend. It's not that hard to identify that price is making lower highs and lower lows, and all you have to do is look at the highs and look at the lows. What do I mean by the highs and the lows? Look at the pivots. Where does price change? And that's simply it. Very simple, very simple. So we look at the market structure here on the daily time frame, and price is making lower lows and lower highs. So our current low point here on the daily time frame trend, and this isn't going to be from a day-to-day perspective, this is going to be from an overall outlook on what the market is currently doing. Our current low is right here, this bullish candlestick low. This is going to be our current low on the trend. 28,570 is going to be our current low. Our current high on the trend is going to be 30,44.6. So we can automatically make the decision that, hey, if price breaks back above 34.36, which is going to be our days or our current bearish structure lower high point. I don't know why I started there. My bad. Guys, haven't had much sleep, right? If price breaks above this point here, which is going to be our lower structure, lower high point, our structure lower high point, then price is most likely going to continue and actually start a bullish trend. At that point in time, it'd be higher highs and higher lows. That's what we can anticipate. So with the information that we already have on the daily time frame, price is overall still in a bearish condition, telling us that we can expect price to continue to drop. Now, realistically, it depends on what the CPI report comes out to. If the CPI report shows us that inflation is slowing down, obviously that is going to be a bullish catalyst for the market, and price will continue to trade bullish ultimately, right? Now, for that being short term, long term, doesn't really matter. That's all you guys really have to know. Now, if the CPI report comes out higher than expected, then we'll see a bearish catalyst for the market, and we'll see the market continue to drop. Now, you have to ask yourself the question, okay, well, price currently right now is consolidating in between this 2,900 range and in between this 29,500 range, let's call it. So me personally, what I see with price is there's two areas where I'm interested in going short, because right now I want to trade with the trend. The first area of going short is going to be this 29,420 range, which you guys could very easily see this zone. If price can pull back into this zone and give us another rejection, that's a great sign to short back down into 2,900, which can roughly be about 350 points, which is a lot. That is a very decent sized move. And obviously, if price breaks under 29, let's call it 2,900. If price can get under 2,900, then we'll see it come back down into the daily lows at 28,648, 28,650, let's call it. Now, if price breaks above this 29,500 area, then you could very well easily expect price to come back up into 29,700. How I would play this trade would be to wait for a break of 29,500, wait for a retest of 29,500, and then look to buy it up into 29,700. Because what you want to avoid is something like this, where price came back down into 2,900, but ultimately went bearish, which I did catch a portion of this move. That's going to be the play for US 30. Again, buys above 29,500, sells under 29,400 and 29,100 flat. Now with the NASDAQ index, things are a little bit different, because as of right now, the NASDAQ is trading pretty much back under our major area of support, which if you look left, this is a major area of support, which we also have resistance in this area. And this is also an area where we just had a major rejection. You go to the 4-hour time frame, and price is now trading under this area of support. So obviously the best thing for you to do in this situation is, if the NASDAQ can pull back into 10,847, which is its previous area of support, then we could see it come back down to these 4-hour lows, which is going to be 10,17, and then possibly see it come down into 10,650. Anything after that, then we'll probably see 10,500. Now, anything above 10,840, 10,850 could possibly looked at as buys because we have this major rejection here. We also have this major rejection here, and so far it's holding as resistance. So if price is starting to trade back above this area, then just wait and see if this area holds support because you want to avoid a fake out. Now, if price does break back above, you can easily see it come back up into the 12,950 range up here, which would be a very, very nice move. You could definitely trade this off of a lower time frame. But like I said, again, guys, if price can reject 10,840, we'll come back down into 10,700. If price breaks above 10,840, we can come all the way back up into 10,950. Very, very simple. Very, very simple. Again, you have to take the basic concepts into consideration, which is just simply supply and demand and the way buying and selling pressure works. Gold is a little bit different, right? So right now, I wouldn't do anything on gold. I would wait and see if gold actually comes down into this area. Now, if gold can come down into this area, which most likely it does look like that's going to happen, then you have to wait and see if gold is going to have a possible buying opportunity, which I don't see to be the case. Overall, the trend on the weekly time frame is bearish, and you guys got to keep in mind that this is an area of support that was held literally for the last few years, especially moving on into 2023. And now price is trading back under this area of resistance here, being 1680, which you could see the last two trading days, gold has already rejected 1680. So we can very well easily see gold come down to 1660. Now, for those of you guys that want to jump in on the possible sell opportunity, realistically, the only areas you should look to sell is going to be roughly this 1680 resistance. Simply look left, right? Or if gold can actually break under this area of support, retest, and then you can look for it to come back down to 1644. Again, guys, like I know a lot of you may be super interested in selling at this area where gold is at right now. You can say, oh, bearish engulfing, rejection of the moving average, etc., etc. But you guys got to remember, if I tell you, hey, there's three zones we're looking at right now, right? There's zone 1, zone 2, and zone 3. Gold has a 90% chance, right? And I'm just giving you random numbers. I'm not saying this is the actual probability. Gold has a 90% chance of rejecting zone 1. Gold has a 90% chance of rejecting zone 2. And gold has a 50% chance of going in either direction here, right? Where are you more likely inclined to take a trade? That's going to be at our more major areas, being the 90% probability areas, right? I'm not saying it's exactly 90%, but it's definitely a lot higher probability than here. Because right now, gold at this point in time, realistically, can either go up or can go down because we're trading in between two major areas of support and resistance. And again, our job is to try and get in after the rejection of resistance or after the rejection of support. So why would you put your good, hard-earned money at a 50% risk trade when you could wait it out and have a potentially 90, and I'm going to say this in quotations, 90% chance of winning on a trade where it has a very high probability? It doesn't ultimately make too much sense for me. That's what I would wait for on gold. Now, GJ, very, very simple. We have a lot of strong buying pressure from the last trading day, and ultimately GJ broke above its previous highs at about 162,500. Now, what I would wait for on GJ ultimately would be for GJ to pull back down to 162,500, and if price can maintain this area of previous resistance and hold it as support like it did here during the Asian, a little bit before during the Asian, this was like midday earlier today, then it has a very high probability of continuing to go all the way back up into 135,500. That's where I would look to target GJ. Now, anything under this 162,500 zone, you could possibly expect GJ to come down into 162 flat, maybe even 161, depending on how strong selling volume actually is. Anyways, guys, I hope you guys were able to benefit off of this breakdown. I hope you guys are looking forward to the trading week. And at the end of the day, I'm just here to help you guys and give you guys my previous 6 years of trading knowledge and experience and what I would look for in the markets at this point in time. So with that being said, hopefully you guys have a great rest of your trading week, and good luck to everybody that's going to be trading CPI tomorrow.